I audible? Sorry, there was a technical glitch. So coming back to the agenda, today we are going to cover in the next 1 hour the overview of 56th GST Council meeting. When I say overview, what is the intention behind the government in hosting the 56th GST Council meeting, and what are the deliberations that happened in the meeting? Basically, this GST Council meeting, we all know that it is only a recommendatory body. Ultimately, any change will have to be taken with the due consensus of all the states, and it has to be passed in the parliament to come out in the form of rules or in the form of act. So next, what are the key changes also we will understand. Third, the most important, what is the outcome? How many decisions, whatever was recommended and whatever press release was published after the GST Council meeting, which are going to get implemented post the GST Council meeting, and how many sectors are going to have impact in terms of reduction in rate or enhancement in rate. How are they have to treat the changes in terms of passing on the benefit to the end consumer. The last but not the least, which we all of us have to keep in mind, is the action point for taxpayer. As a taxpayer, what are the important measures that we have to take care post certain date? So with this brief introduction, let's move on to the first agenda of today's discussion. So we are calling it as GST 2.0. GST Reform 2.0 is the coined word and tagline which is floating around everywhere. This is a buzzword, I would call. So what is the reason? Why are they calling it as a 2.0? So the reason, if you look at it, GST itself is a biggest historical reform in terms of indirect tax. So in the year when 2017 GST was introduced, it subsumed more than 15 taxes, and one nation, one tax, one market. GST was introduced and rolled out on 1st of July 2017. It took about 12 years for our government of India to come out with a comprehensive, very stable and strong law as GST. So having done so, it has traveled about 8 years now. In between, there were a lot of changes. In fact, it came to the point why GST was introduced, right? So many of the taxpayers were not very welcoming or were not very, satisfied with the amount of changes. But every change had a meaning behind it. So the GST Council was one of the most important, plays an important role when it comes to the Constitution. So 279A enables the GST Council to make recommendations to the finance minister in terms of heading as a chairman of the GST Council to pass any rate change or structural change, certain changes which have to be taken in concurrence and with absolute majority of all the finance ministers of the state. So that is how the GST Council is structured. So what we are going to discuss today is the 56th GST Council meeting. So when I say the reform 2.0, it has got its own meaning, because the general meaning is that every council meeting comes out with some new change. Either it is a relief for the taxpayer, considering the ease of doing business, and then plugging certain loopholes in the provisions, or fixing the rates, passing on the benefit to the end consumer. So basically, these are some of the pillars which are behind any change, right? So when it comes to Reform 2.0, on 15th of August, our Prime Minister announced that this 2.0 is going to be a big change maker in the indirect tax regime, because 8 years of journey itself was considered as a successful implementation. Because if you look at various countries across the globe, many countries failed in implementing, or some of the countries could not implement the way they wanted to. But having said so, India also had its own challenges, but still it could implement in the way it wanted, taking the confidence of central and state, making it as a unified tax. So there are a lot of reforms were introduced and happened, and seamlessly it was going through in the GST law. So on 15th of August, with the intention of further refining the act, our Honorable Prime Minister announced that this is going to be a Diwali Dhamaka, right? So saying that it will focus on 3 things. One is ease of doing business. So the taxpayers filing of returns or payment of taxes or facing the assessing officer when it comes to scrutiny or assessment, it will be made friendly, taxpayer friendly. And any kind of registration or refund or anything relating to interacting with the government is going to be very smooth and seamless. So that was the pillar number 1. Second was that rate rationalization. If you look at GST at the time of introduction of GST, there were various slabs, various rates, right? So we call it as, say 5%, 2.5 plus 2.5, CGST and SGST, and then 12% there was a slab, 18% there was a slab, 28%, 40%, 3%. So multiple slabs were there with respect to different goods, different services. On top of it, wherever you are not able to classify any goods or services, there was one residuary class. So this is how the various products, what I mean is goods and services, were classified. And it was very comprehensive. So with that has to be simplified. So if they want to call it as a real simplification of rate, the number of slabs will have to be simplified. It has to be, that cannot be more than 3 or 4. That was the intention of government. Because if you look at some of the countries like Singapore, where they say that there is only one rate of GST, 5%, whether with input, without input. So it becomes very easy for any taxpayer. They don't have to worry about whether it's goods or services or whatever. So with that future plan in mind, the government has structured, saying that this is a time for us to rationalize the rates. So any decision that is taken will have to be backed by data. The results have to prove, the revenue has to be in place. So if you look at the last at least 4 or 5 years, consistently we are seeing that there is a increase in revenue collection. Maharashtra being the topper, and other states, Karnataka is also very close to Maharashtra. So some of the states are fairly doing well because of the transparency in the mechanism, collection process, and seamless transfer of input tax credit, various other reasons. So the government realized that there was a surplus. I wouldn't say surplus. There was a sufficient collection of revenue from indirect taxes. So having so, it is time for the government to relook at the different rates and pass on the real benefit to the end consumer. There are certain products which were definitely does not deserve the rate that it is being taxed right now. So it requires a relook. That was one strong intention behind this 56 GST Council meeting. Second, there should be some structural changes. What are the structural changes? If you ask me, tribunal has not yet been formed. It's about 8 years of GST now, because of various reasons. One reason which the government also, which we come to know from our experts and seniors, is that government was finding it difficult to find members, competent technical members were not available. Judicial members who were competent in understanding the law were not available. Right. Second, infrastructure. So infrastructure can also be managed, but the litigation was mounting. With that, last year they introduced the rules. Tribunal rules were out. So we were expecting for tribunal any time to be formed. So that has to come to a logical conclusion. So these three are some of the strong pillars and the strong points which were behind the 56th GST Council meeting. And one more reason why we call it as a reform is that we want to be self-reliant. Self-reliant, we means our Indians, our taxpayers, and our consumers, and our producers. Atmanirbhar Bharat, local for vocal, vocal for local, is that what the slogan which our Honorable Prime Minister always says. So everything needs to be produced in India, consumed by Indians, and we should be in a position to export from India rather than importing from any other country. So if we want to be cost competitive and rate competitive, it is very important for us to relook at the rates and reduce the manufacturing cost. So these are some of the intentions, and also the trigger could be, it's just my view, US tariff rate also could be one of the reasons why the change in the rates are being comprehensively analyzed and changes are being recommended. So this is the background and overview of 56th GST Council. It is just not just like any other meeting where the chairman takes the chair and then listens to all the states' finance ministers' views and then goes ahead and gives a proposal. It's not so. If you look at it behind the scene, before the 56th GST Council meeting, a lot of homework have been done by the government, and right from whatever is notification or circulars which are going to be out, including that, has been drafted and kept ready. It is just a click of one button where they were waiting for the consensus, and once the consensus are out, the notification will be released. It means that everything is being planned, analyzed, consensus are taken, taxpayers' views are very much respected, and also the industry's pain points are analyzed, deliberated, and then it's a well thought through decision. Is that what the outcome of 56 GST Council meeting? The reason why I am stressing upon so much is that whenever we make any change, the first comes the resistance. We say that this should not have been done, that should not have been done, this is how it should have been done, right? So there is nothing wrong. Once any changes is really impacting your industry, as a honest taxpayer, the government is willing to listen and willing to address all the changes, provided it is rightly represented, timely represented, genuinely represented. So whatever changes that they are proposing is all from the outcome of the pain points and representation given by every sector. So now coming to the GST Council meeting, it was scheduled on 3rd and 4th of September. 2 full days meeting is that what originally planned. But because of their efficient way of deliberation and other conclusions that they could arrive at very smoothly, they could complete the meeting in one day. I was quite impressed. After a very long meeting, our finance minister was giving the press conference at 11:30 p.m. in the night, and it went on for more than an hour. So that is the amount of effort have gone from all our finance ministers and our government. So if you look at the press release, it's about 80 pages, and there are annexures. One, a detailed HSN classification wise annexure. Second is the sector-wise HSN classifications, wherein sector-wise it is bifurcated. Say agri sector, transportation sector, healthcare sector, hospitality sector. So sector-wise they have defined the HSNs. So how to handle this rate change is the biggest challenge now. Do we have to refer to the old one, or some of the items should we refer from here? We'll come to that later. So when is it going to be effective? Even that is also mentioned in the GST Council meeting press release. Whatever changes recommended are going to be effective from 22nd of September 2025, right? So 22nd, we are on 20th today. So from Monday, it has to be enabled. Whatever changes that are recommended through notifications, which are all effective from 22nd of September 2025. Now, is there any amendment in the law and rule? Yes, there are changes in the amendments also. There are certain changes are done. So what is the anti-profiteering? If you look at it, government says, yes, suddenly some change in the rate. Who's going to monitor? How is it going to be monitored? If in case if something goes wrong, taxpayer, whether knowingly or unknowingly, if it goes wrong, how is it going to be? Is there any provision for him to make the changes and then regularize it? These are some of the thoughts which are in many of our minds. So these things have been clarified in the form of circulars, though there is no anti-profiteering. Just let me take a minute to explain what is anti-profiteering. Anti-profiteering is nothing but, as per the government, as per the GST Act, whenever there is a change, effective rate of change in any product or goods, the benefit that the taxpayer is getting out of the change, rate change, will have to be passed on to the end consumer. It means that, say for example, one product is charged at 18%. Okay, so 100 rupees is the product rate, 18% is the tax rate. 118 was the rate, was the MRP of that product till 21st of September. From 22nd, he should not be charging at 18% because 18% rate has been changed to 5%. So the end product of MRP of the goods may be at 105, provided whatever input tax credit benefit he was getting from charging at a old rate, 18%, that benefit should be passed on to the end consumer. It means that just because there is change in the or reduction in the rate of tax from 18% to 5%, he cannot apply some rate, reduce it from the MRP and say that this is what the price. There should be a clear working papers available with him to ensure that this was the cost prior to the rate change. This was the benefit which was getting because of setting off of input tax credit. This was this margin. And now after the rate change from 18% to 5%, this is the MRP which he is going to sell at. In case if that is not done so, the government can take action through anti-profiteering authority. The authority was established at the time of when GST was rolled out. Whereas in 31st of March 2025, the provisions relating to authority was withdrawn. I mean, it was a sunset clause basically. So it ended on 31st of March 2025, because of which there is no anti-profiteering authority available. There is no government authority will be keeping a watch on the whether every taxpayer has made the effective changes in the product or services. For that, our finance minister has also addressed, we trust the taxpayers. We presume that every taxpayer is honest. We have complete faith in the system that we are operating on. So kindly ensure that the benefit of rate reduction in the tax rate reduction is passed on to the end consumer, because end consumer may not be aware of this 56th council meeting, reduction in rates, this product has changed, may not be aware. If you ask a common man who's buying a footwear or buying a jam, he may not be knowing whether there is changes affected from which date, he will not be aware. At the same time, there is every possibility that the kirana shop owner may also be not aware that it has to be sold at a reduced price from so and so date. So since we do not have a authority in place as per law, does not mean that the taxpayer, does not mean that every manufacturer or distributor or dealer will not be passing on any benefit to the end consumer. So the government has complete faith in the system. So with this in mind, this rate reduction has been proposed. So as a taxpayer, just because there is nobody to watch, let's not have that in mind. The officers will be in place to ensure that these are all properly followed. As professionals, we are also there to advise you on what are the changes that are done so that you keep up working papers. At future point of time, whenever there is an audit or assessment happens, scrutiny happens, inspection or anything, at that point of time, definitely they would be calling for some documents on the change of rate. So it's very important for you to have the working papers in hand. Second is that government has also, CBIC has come out with FAQs. It's just not only the notification. There are FAQs, frequently asked questions and answers are there, and circulars are already out. And there are other clarifications from the Consumer Protection Act. If you look at when there is no anti-profiteering authority, still as a common prudent seller, I am using the word seller, I am not saying a taxpayer. Every seller of goods or services will have to ensure that they are answerable to the consumer. As per the consumer can also take protection under the Consumer Protection Act, which is always there in place. Whether this GST is just a rate change, but as a consumer, if I feel that the MRP that is charged to me is higher, definitely I can go and approach the consumer court. So that provisions are also enabled. There are certain notifications, there are certain circulars, and circulars have been out from Consumer Protection Act department also, ministry also. So whether is it binding on GST taxpayer, that's a different question. But as a seller of goods and services, you are not only binding by, you are not only you are following not only the GST Act or rules, but also the Consumer Protection Act also, and also the Competition Act. So you have to be very thorough and make a informed decision keeping these laws in mind. So this is the background behind the 56th GST Council meeting. As I told you before, it just wouldn't have taken for me to show the pictures of rate change and this, but that's not the intention of this webinar. So when it comes to key changes in the GST Council meeting, one was the rate rationalization. In that, there are so many rates are being consolidated. Consolidation, you may ask whether it's only consolidation means 1 or 2, but still we have got 7 schedules. That means 7 rates are in place. But if you look at it carefully, if you examine, many of them are all clustered and grouped. Some rates are very, very minimal, like very, very minimal products. Those rates are all notified. It means that those are all rare goods, I would say. So majority of the goods are falling under maximum 2 to 3 slabs. So it's not much, but still you have to refer to the respective schedules. Then on what way is it categorized? How do I remember? See, if I'm saying a calculator, I should have some common sense, right? It just cannot be every time referring to the HSN and then tariff rates. Yes, you have to refer. I'm not saying don't refer, but as a common sense, you should have, like, why different rate? Why not at a higher rate, or why at a lower rate? Every essential item are always at a lower rate. Say, for example, food products, right? Medicines. Some of the medicines were at 12%. It has been brought down to 5%. So because considering it as essential, some of the goods are all banned. It is not socially acceptable goods. I would say pan masala or cigarette, luxury cars. These are all some kind of luxury goods or sin goods. So these can be at a higher price. Why is it rated at a higher rate? People who can afford can always pay more, right? So with that intention, government wants to collect money, in the form of rate of tax, higher revenue from people who can afford. So with that intention, it has been bifurcated. And second is that it has been cutoff date is also given as 22nd of September, thinking that the taxpayer will have enough time to plan their products, plan their goods, and labeling or pricing, everything, sufficient time should be given. So that's also done. But one more thing which you have to keep in mind, whenever there is a finance act, whenever there is a budget announcement, the budget always says two things. One addresses two things. One is that direct tax. When it comes to direct tax, it is effective always from the the bill will be passed with the presidential assent. That would be the effective date for implementation of direct taxes. So when February budget is presented, it will get effective from the next financial year. So for direct taxes, you will have time. Whereas during service tax or excise rate or any changes in the indirect tax will have to happen on the same day of the government announcing the rate change. Whereas this time, if you look at it, they have given sufficient time up to 22nd of September as a date for implementation. Why is it given a long date? Why not the same day, unlike any other year? Because the government wants to give time for every taxpayer with the clear mapping of rates, how the input tax credit will be flown through, how it can be addressed, how the pricing can be done. Please do it with due care and take your time in doing it so that the end consumer is benefited. It's just not that in click of a button changing from tomorrow this rate. No, because it will have other repercussions. So considering all that in mind, they have given 22nd September as the effective date for change in the rate of tax. Then when it comes to compensation cess, it's been completely removed. Having said so, for one product, it is still there. But compensation cess was there for vehicles, that has been removed. So what will happen to the accumulated input tax credit? Wait, the government is yet to come out with the clarifications. There are certain things which are yet to come. As we speak now, it has not come. I don't know after 4 o'clock whether it has come or not. So that is the pace in which the GST is evolving. So when it comes to cess, as of now, the cess was there on vehicles and cigarettes and on certain goods. They have removed completely from vehicles. That means vehicles are no longer going to be going to suffer cess. Then next key change, if I have to talk about, is trade facilitation measures. Sanction of refund for any refund of nil rated or export of sales or goods. 90% of the refund, 90% of the claim of refund will have to be dispersed within 7 days. Is that what the proposal? You may ask whether this was not there earlier. Yes, it is very much there. And what is that to reiterate here, right? It is very much in the act. It is whether is it practically in place, that's a different question. So government is trying to improvise on that, stating that the refund is going to happen 90% of the amount. Say 1 crore is your refund because of export turnover, and out of that 90% of that amount will have to be dispersed without scrutiny. Sanction will be done within 7 days of time. Then depending on the scrutiny, like whether you have to pay or they have to give the balance, will be done at a later point. For any delay, even in the act it is in place, any delay, 6% of interest every taxpayer is due. Whether he is giving, getting, not getting, that's a different story. Practical story I'm not talking here, because practically we are giving a declaration that we are not claiming the interest, right? So these are some of the things which the government is keeping in mind, trying to do certain measures to facilitate the trade. Next is the inverted duty structure. Because of this change in the rate of tax, it is going to create a refund kind of scenario for many of the taxpayers. So refund, I'll tell you with an example. Assuming you were selling a product at 12%, right? You are selling some, say, thermometer at 12%. From 22nd of September, it is going to be taxed at 5%. Whereas your input tax, all your raw material, whatever you are procuring, right? Whatever you are procuring to manufacture the thermometer are all at a higher rate, say at 18% or 28%, whatever it is. Because of this change in output rate is lower than the input rate, you will end up in a scenario where you will have accumulated input tax credit, right? So as per the inverted, this is what we call it as inverted duty structure. So when it comes to inverted duty structure, whether are you eligible for refund? Inverted duty structure has got its own limitations, in the sense inverted duty structure refund can be claimed only for goods. It is not for services, because if you're rendering any service, say I am a doctor, I am not able, or hospital, or I'm in the healthcare service, right? So when I'm healthcare service, there are some of the items are taxed. Selling of certain items, say stent or any medical equipments, are taxed at a lower rate or whatever rate. Whereas my input tax credit is at a higher rate. In such case, as a healthcare unit, I can go for refund only relating to goods, not relating to services, right? And for capital goods also, it is not applicable. So some of the restrictions are there with respect to inverted duty structure. So the reason why I am bringing out this point here is that we have to examine whether, because of this change in rate from whatever I discussed in the first basket, rate rationalization, if anybody is put into a scenario of inverted duty structure, is it going to have any impact, or are they eligible for any refund, needs to be examined. Then automatic registration within 3 days. That is what the government is promising. Automatic refund means what? Automatic registration, sorry. Automatic registration is, currently, if you look at it, the registration takes about 15 days, physical inspection. Every state has its own policies. So there is no uniformity. So from now on, any taxpayer who's declaring, or through the risk parameters, or through some kind of verification mechanism that is in place by the government, artificial intelligence and data mining and risk parameters available with the database, available with the GST department, if any taxpayer, if any trader or anybody who wants to apply for a GST registration, individual applying for a GST registration, his database will be checked. And if the government is of the opinion that his track records are clean, and one more thing is that his monthly tax liability is not going to exceed 2.5 lakhs per month. Monthly output tax liability is not going to exceed 2.5 lakh a month. In such situation, they are going to give the registration within 3 days without much of verification. So currently, if you look at it, even if somebody voluntarily wants to take for a registration, his turnover may be only 10 lakhs, but still he wants to go for registration. The registration process is so lengthy and it is uniformly applied. Like his rental agreements are checked, his electricity bill, declaration, so many verifications are happening at various levels, because of which the process takes about 2 weeks to 3 weeks. Some of the cases they reject, saying that your business premises is wrong. You are doing it at your own at your residential address. So these things will get eliminated and the registration process is going to become very, very smoother. Then last part of that is structural reform. In the structural reform, the place of supply in case of intermediary, this is very, very welcoming proposal, I would say, because the intermediary provisions as we stand today, section 13(8)(b), if you see, the place of the supplier is the place of supply for intermediary. This has been changing. This is going to change to place of supply would be the location of recipient. Who's an intermediary? Intermediary is a person who's doing some act of selling or selling of goods or services on behalf of somebody else. So what is the benefit which we are going to get because of change in this provision? There is every possibility that the intermediaries will be benefited because it would be treated as an export of goods or export of services. So let's wait for the changes to in place so that we can explain you in a much better way. Then the last is that GST tribunal. It is already in place. In some of the, I heard in Maharashtra, in Mumbai, they have already started. Beautiful building. Government has infrastructure. It has wonderfully, created with a very sophisticated and modern infrastructure. But having done that, it is going to be online. How far it is going to be effective? Is it going to be like yet another faceless assessment of income tax? We need to wait and see. And members are shortlisted. Members are already, we would have seen in the recent times, in the last month, the name of the members were already out, published. So we know who are all the members from every state in Karnataka as well. And it is going to be commenced from before end of December. So the first hearing will start happening from December first week. So these are all some of the major things and key changes with respect to 56 GST Council meeting. Now I will just quickly glance through what are the changes and rate amendment in the change of goods. As I said before, these are the food and beverages which were at 5% earlier has been changed to either 0%, which were at higher rate of 18% were also made it as nil rate. Some of them were at 18%, have been moved to 5%, which were at 12%, because 12% has been completely removed. That is what we understand. So 12% has also been reduced to 5%. So I cannot list all products. So I have just giving you the glance of what are the major changes and which are very much relatable. So tobacco sector, which was suffering 28% plus cess, now it has gone to the higher slab of 40%. What is the status of cess? As I said before, cess itself, it was coming to about 7% effective rate I'm talking about. So basically it has gone from 32% to 40%, I would say. So some of them have come down. 18% it has come down to 5%. BD has come down to 28% to 18%. And in education sector, there are a lot of changes. The goods which were used for educational purposes, whether it can be a geometry box or it is a notebook or it's a graph notebook, some of them were at a slab of 12%, has come down to 18%, as 12% has been removed from the entry, from the schedule. And healthcare also, it has, in healthcare sector, there are a lot of changes, which was at 5% has been made to nil rate. Medicines which were at 12% has come down to 5%. Automobile sector has undergone a lot of changes. If we have to study what is the impact from the consumer side, from the manufacturer side, from the distributor, because this sector requires careful examination. It is just not some one fine day you change the rate, right? This sector it has its own complications. So if I have to just explain quickly, the manufacturer passes on certain discounts, right? So it can be post-sale discount, pre-sale discount, and one fine day when there is a change, the consumer is already made aware that, remember, the consumer who are all going to buy cars have stopped buying, thinking that the rate is going to reduced. That news has already spread. That is the reason why, if you look at in the past, all the indirect changes, indirect tax related changes will become effective from that day onwards. If finance minister announces at 12 o'clock, it will get implemented from 12:01 minute. Whereas now here, it was done, press release came out on 3rd of September. We are given time up to 22nd. So this is given for a good purpose, because they have to ensure that the benefit is passed on. But consumer has got his own way of behaving. So they will stop buying, thinking that the price is going to come down. But we have to analyze whether the price has really come down. Is it the understanding of the common man? Is that correct? Because as far as the common man is concerned, say for example, if I have to give you a simplest example, is insurance sector. Insurance sector has come down. I mean, for individuals, insurance, whether it is a health insurance, endowment insurance, life insurance, whatever may be the insurance, the accident insurance, everything has been made to nil rate. That means it has been completely exempted. Earlier, it was at 18%. So as far as the common man is concerned, if he was buying an insurance product, say at 100 plus 118 rupees, he's expecting that the price is going to become 100 from 22nd of September. It's not going to be the case. It's not going to be at 100. It will be maybe 105 or 106, right? So the understanding of common man is different from what the manufacturer or the producer of goods or services is in, because he has to see, once the goods become exempted, it has got its own mechanism of reversal of input tax credit. He will not be eligible to avail the input tax credit. So where else he will park the cost? It has to be passed on to the end consumer. So wherever there is a reduction in rate of tax, it compulsorily requires the alteration in the base price. That means base price as well as the MRP. So this is the crux of when I say talk about rate rationalization. It is not all about just change in rates. Change in rates, I'll give you a beautiful picture here in the following slides, where just by going there, you will be able to get what is the rate for your product. Okay, transportation sector has also gone through a lot of changes in the rate of, in terms of change in rate. It is not just change in rate. You have to read in concurrence or in parallel, drawing a parallel line with the input tax credit, because input tax credit plays a very vital role. Having understood the rate, output tax rate, if you have not taken care of your input tax, then you will be in serious trouble. So whenever you read the rate change, read it along with the effect of input tax. So these are all the changes with respect to the transportation sector. Then this is the health insurance, and job work also, there are a lot of changes. And construction service, with respect to construction services, it has been existing prices, works contract services are at 12% with ITC. It is going to be increased to 18%, but still the majority of the goods in the, either from cement or tiles or bricks, whatever it is relating to construction, across the industry, products which are relating to the construction sector has come down. So overall, we can expect 5 or 6% reduction in the end price that a consumer is going to, shell out for buying any property. That means that we can expect a boost in the real estate sector, because the price that a consumer, that means the price that a common man is going to pay for buying a house or constructing a house, is going to come down by 5% overall because of the rate rationalization. Next is that hospitality sector. Here also we have to be very, very careful, because so far till 21st, as we stand today, hotel accommodation services less than 7,500 per unit was done at 12% with claiming of input tax credit. From now on, it is going to be at 5% without input tax credit. It means that whenever there is a change here, they have to take care that the input tax credits are all reversed, right? So beauty care services, which is very welcoming thing. Earlier, it was only in case of similar services. It was under blocked credit. Only same line of business, we were able to take the ITC at 18%, but the overall thing has come down from 18% to 5%. So the beauty products or parlors or salons prices, overall price will come down. And casinos and other race clubs and IPL, these are all actionable claims, we call it. Admission to these casinos, all those were at lottery, were at 28%, has been increased to 40%. So these are some of the changes with respect to the first basket where I was explaining about rate rationalization. So when it comes to outcome, now that this is what was discussed, whatever I told you now is just the overall view of GST Council meeting. What we are going to see is the reality. On 17th of September, in fact, it came very late in the evening. It came about 11 o'clock in the night. The notification was out. So the rates are going to be effective from 22nd of September 2025. So this is again, I have just summarized this. Please do not refer notification number 1, 10, 11, 2, 3, nothing of 2017 anymore, because we call it as a reform 2.0 version. So this is a 2.0 real version. So any change in goods, any rate of tax relating to goods or services, you have to refer to this notification number 9/2025 only, and no other notification number. So it has been just, I have summarized this way. It contains about 7 schedules, right? The notification 9 contains 7 schedules. Each schedule has its own rates. It starts from 5 to 18, 40, and 3%, 0.25. That means 1.75, 0.175, 175, and 1.5%, and 28%, 14 plus 14. So the maximum number of entries, I mean the classification, tariff rates, how it is grouped. So 516 entries are there at 5%. 640 line items, that means serial numbers, are there at 18%. If you look at 0.25, these are all very, very minuscule, like 3 entries, diamond, precious stones, which are all not going to be for a common regular taxpayer. Like, majority of the taxpayer will come under 516 entries or 640 entries. That is what we call it as, minimizing the slabs, because these slabs are very hardly used. Majority of the slab, 95% of the taxpayers fall under that of Schedule 1 or Schedule 2. So you can see what are the goods that you are selling. Accordingly, you have to refer to the notification number 9, go to the prescribed schedule, look at the HSN. Looking at the HSN is very important. Just I have put a summary here. If you look at 0 exempted goods, 172 categories of goods are there. And Schedule 1, it comes at 516 entries at 18% rate. At Schedule 2, 640 entries. And Schedule 3, which is taxed at 40%, there are 14 entries. Schedule 4, 3%, 15 entries. Schedule 5, 0.25% at only 3 entries. Schedule 6, 1.5% at only 7. There are 6 entries at 28%. This is just the summary of HSNs. So when you want to see how to look at the HSN, that is an art, I would say, because not all products are as simple as we see or as we use. You need to have some technical knowledge when you are classifying the goods or selecting the HSN. Selection of HSN and classification is a very, very important task. So make sure that you use the right HSN, because the rate depends on the HSN. So classification And then choosing the right HSN, choosing the right heading chapter is very important for you to arrive at the correct rate. If there are overlapping, certain goods could be at 5% or 18%, you have to take extra care, because there is every possibility that certain goods may fall under here or there because of change in the manufacturing process or usability. There could be various reasons. So when I say chapter, heading, subheading, tariff, 2 digits, first 2 digits are chapter heading. So if you look at 2401, 01 is a live animal. Then further, if you drill down, it goes to 0101, live horses, and 01121, pure breeding animal, right? Pure bred breeding animal. Then 01012100, pure bred breeding animal. See, you can just see how deep you have to go, right? So this is how the HSN needs to be selected. It is just not going by live animal. Live animal can be many things, right? So you have to go this way. And I have shared the link where you can put the HSN. You will get the complete history of products. You will also come to know what was the old rate, what's the present rate. It's very important for you to understand the product that you are selling and then selecting the right HSN. So many of us, I also mentioned that 12% is removed. But please remember, 12% is not removed. It is out of the schedule, right? It is out of the schedule, but 12% is still there. Many of the goods have gone from 12% to 5% or 18%, or some of them have gone to 28%. And now if you look at it, notification number 14/2025, it has introduced 12% tax rate only for this fly ash and bricks building material and also roofing tiles. Apart from that, no other goods are at 12%. That's the reason why they have removed from notification number 9/2025 and then inserted it through notification number 14/2025. So this is just for your understanding. And when it comes to compensation cess, we expect some more clarity. Is it only for specified goods? So what happens to the input tax credit that is available? Because government is not strictly said that yes, it is not going to be, you cannot set off because there is no output. So can it be adjusted against any other taxes? We do not know. Can it be claimed as a refund? No, it cannot be claimed as a refund. That means what happens to that cess? If somebody is having, say, 15 lakhs or 20 lakhs crores of cess in their electronic credit ledger, what is going to be the fate of that? Let's wait and see for further clarification from the government. Then car segment, many are jumping saying, oh, my cess is removed. But as I informed before, it's going to be, we have to do a thorough understanding of the facts before, rejoicing or before feeling bad that rate has been increased or decreased. So it will have to be thoroughly understood, do the costing, and then only we will be able to advise whether the price impact as rate change has really impacted in the price. So if you look at small cars have gone from 28 to say 18%. Big cars have gone from 28% to 40%, right? So 28% plus cess was there. Now it has gone to 40%. So is there any real increase in the price? If you ask me, considering the input tax credit, the benefit, whatever is available for a small car purchase and big car purchase is more or less is going to be the same. So we have to have the facts in hand, price in hand, MRP in hand, before and after, apply the discount, apply the effective rate of tax, apply conditions of input tax credit availment or not. Then only we'll be able to advise our clients whether there is an impact on the sectoral impact or consumer impact on the because of rate change in the rate. Then one thing is very clear, cess needs to be reversed with effect from 22nd of September. So whoever is having a cess in their books of accounts will have to be reversed. So reversal means, is it a payment? Reversal means, is it a claim Are we going to refund in the form of inverted duty structure or something? Let's wait and see. And when it comes to cars, the electronic vehicles are EVs are charged at 5%, right? It comes under Schedule 1. So if that being the case, what is going to be the impact? So car, when I say car, it is just not a generic term, whether it is a small car or EV car or luxurious car, all the things we have to understand before commenting on the price impact or rate rationalization. Then when it comes to input tax credit, as I think I have handled this on anti-profiteering measures. Then when it comes to, there are certain changes, structural changes, there are certain change in the amendment in the act, amendment in the rules which we are expecting, which the post-sale discount, which was, what is a post-sale discount? See, post-sale discount is nothing but the the supplier sells the goods. Say, for example, I'm selling a mobile phone, right? Say now currently Apple iPhone, if I have to say, i17 is the newest model, right? So i17, when it comes to the market, the dealer may have the i16, i15, i10 also in his stores. So when i17 is placed, the end consumer, the consumer wants only something at a lower price. So the dealer necessarily will have to reduce the price of the old model, right? Whereas he would have purchased it at a higher price. It is a non-moving stock. It's not moved. It is there in his stores. So what happens to those input tax credits, right? There are several circulars. There are several complications. There are numerous litigations around the post-sale discount. I am not touching upon all that because of paucity of time. Just for you to simple understanding, as a buyer, as a dealer, they have to reverse the input tax credit. There are going to be some changes, whether with agreement, without agreement, linking of credit note with invoices. Every credit note should be linked with the corresponding invoice. That is what section 15.3.1 says. So that provision is going to be omitted. That means whenever there is a agreement between the manufacturer and the dealer, whether with agreement, post-sale discounts, it need not be linked to invoice wise. So of course he is liable for reversal. There is no doubt on that. It has to be reversed. But in the current practice of reversal should be confirmed by a chartered accountant. Many of the notices are coming because the taxpayer, as a dealer, he has to prove that he has reversed the input tax credit, for which he has to take the certificate from a CA and then prove to the department that this much he has reversed because of post-sale discount. So these complications are going to be not there because of certain amendments in the Act and the circular. Circular clarifies that. The circular is already out. So those who are relating to the industry can understand it better by reading it. Then these are all some of the sectoral impact. So we may not have time to go in detail. So I'll just stop with this, because even after doing so much of rate rationalization measures, there are certain industries are still impacted. In the sense, if you look at printing industry, see, sale of books, book selling is exempted. There's no price or GST rate for books. So having no GST rate for books, now what they have done is that they have increased the price of paper, right? Paper used for printing has gone up from 12% to 18%. So earlier itself that industry was suffering because there was no output tax they could not collect. There was no offsetting mechanism. The input tax was like going as a cost to the end consumer. On top of it, now because of increase in the rate of tax for all the raw materials and inputs, the cost, the MRP of the price that he's selling to the end consumer is going to go up because of increase in the rate of raw material. So this is going to have some price increase for the end consumer, but the intention of the government was to reduce the overall price, but still there are certain industries here and there are certain anomalies. But I'm sure that this industry will take it up and then represent it before the government. So whether because of this industrial impact, every industry is going through this pain, whether will inverted duty structure will get extended to this industry, just like how they had for textiles. Whether will it be applicable for them? These are some of the unanswered questions. What will happen to their accumulated ITC? Assuming there is a publisher who's not selling any other goods, what he has is only the selling of books, publishing of books. So what is the use of having so much input tax credit? So these are some of the questions which are there still prevalent, which are not answered. We do not have an answer as we stand today. Probably in the days to come, the government will come out with further circulars and clarifications. So these are the two-wheeler. How is it going to have impact? Tractor. If you look at tractors, government has made a lot of changes for the agriculture sector. So tractor rates have come down, right from tractor, pesticides, all the inputs that are used for agriculture have been considerably reduced in the form of rate rationalization. So one item is the tractor. So these I think I have covered. So we have come to the last point. You have to understand what is the effective rate of change and what are the action point. Ultimately, our understanding should result in action. So what, as a taxpayer, as a tax consultant, we have to keep in mind is that please be aware of the rate notification 9/2025. Forget about the old notification on rate for goods and services. Understand, correspond each rate notification with proper HSN and then read it with circulars, and rate to be effective from 22nd of September 2025. So your ERP or system or your manual register, whatever it may be, will have to be tuned correctly. Because if you look at GST return now, HSN is very mandatory. You cannot have a HSN with random numbers with the random rates. So you have to choose the correct HSN with correct rate. Not only you, it is just in the supply chain, in the chain, you have to take care that your entire ecosystem is following correctly. Because the government is going to map not only what you are selling at what rate, but also what you are buying from whom at what rate. Okay. So as a chartered accountant, I do not have any business to buy so much of tons of steel, right? I'm just giving you an example. Assuming when I am selling the services, I keep on, as a chartered accountant and rendering consultancy services, if I keep buying material relating to steel, iron, interiors, related cement, then there is every possibility that the input HSN is linked with output HSN. So please be aware that whatever you are buying, whether if you are a trader, if you are a manufacturer, or if you are a service provider, or you are a dealer or retailer or distributor, whomever you are, you make sure that all your products are correctly classified, rates are correctly done. And there are certain changes in reversal of input tax credit also. So make sure that the corresponding rates are, the input ITCs are reversed, timely reversed, and it is not carried forward, and it is not set off against your output. And if you are not availing it, you are factoring it in your cost. That is more important, because now, as per Metrology Act, you have to stick the old MRP as well as the new MRP. Please remember, people who are selling, who are manufacturers, who are distributors and importers, right? These three will have to, these three, when I say distributor, the entire supply chain also we can assume, every dealer, retailer, wholesaler, all of them will have to ensure that the old MRP is clearly visible and new MRP also stuck on the product, so that the consumer is made well aware that the old price what he was paying if he had purchased it before 21st, and post that what price he is going to pay to the storekeeper or whoever, or the shopkeeper, whoever it is. So these are some of the important things which you necessarily have to keep in mind. And what will happen to the old stock? People may ask, how long should I keep doing this? Assuming I have piled up huge stock. So will I have to keep on doing this old price, new price, old price, new price? So there is a time limit has been given as 31st of December. So whichever is earlier, of course. So if you have old stock and you are selling those old stock till this year end, you necessarily have to stick the old price and new price. So and apart from that, if there are any refund because of inverted duty structure, you have to claim and revisit all your litigation cases, because time frame has been fixed for tribunal. So if you have any pending orders, will have to be filed. If you have got the orders before 30th of June, it necessarily has to be, the filing has to start, because the hearing, they will start hearing the matters from 1st of this month end. So we have to be, if any cases are pending, so GST tribunal, once it is constituted, it will be constituted in some of the states, as I mentioned before, it is already in place. So by 31st of December, you have to be necessarily be ready with your related documents. So with this, I have come to the end of the session. Thank you so much for the opportunity. The floor is open for any Q&A. So anybody has any questions, feel free to raise. Somebody is raising hand. Okay, we have come to the end of the session. So thank you so much for your patient listening. Thank you. Bye-bye.